The investor class is a bit different. So in a world where there's constant headwinds around ESG and access to capital, is it fair to say that these investors are yield investors first, oil and gas investors second, versus maybe an oil and gas investor that then has different types of structured products? Because without naming names, I know, Riza has been a leader in this space. One of the credit funds that backs them, their private equity portfolio exited oil and gas and then has gotten involved with Riza in a very big way. And, when I started kind of snooping around that, the answer was, no, this is not the oil and gas group. This is looked at as a credit investment. So is that, I think that's an interesting window of opportunity going forward. If you're looking to leverage ABS as a tool in the tool belt, that this is a different pocket of capital because it's viewed differently. And going into Energia, right? This is a structured product. And again, I think it's targeting yield investors, and it's not so much a focus on the oil and gas component. I don't want to oversimplify that, but what are your thoughts on that?
No, I think you're spot on. Yield first. I mean, look, it's not that they're not focused on ESG. They obviously are. But in the matured ABS market, right? CLOs, credit card receivables, all of those products have been in the market for 20 plus years. So the premium that they're getting on those is probably half of what they're getting on the oil and gas ABS, right? So this is a way to get a premium on an investment grade piece of paper, and that's the main priority. They are focused on ESG, but the way they're looking at it, right, it's a lot of the other ABSs as well have a 10, 20-year duration, right? The nature of the oil and gas ABS, obviously, it's a declining asset, it's a declining curve, declining asset, and a quickly amortizing piece of paper compared to other ABSs, right? So your weighted average life on one of these bonds is probably going to be between 3 and 4 years. Where there's the ESG component of it is, look, by the time ESG really gets traction and a big focus, all of these notes that we're putting our money into right now are going to be halfway paid off, right? And we can manage the ESG risk at a later date, right? So I think there's definitely still a focus, but I think the number one priority for them is yes, like let's look at the yield for these, and if it makes sense, we're willing to participate. And look, for us, when we started this, and I'll segue into Energia so John can jump in here. Energia has been 3 years in the making, right? I think we started both processes, both products at the same time, essentially, with the the dream to bring new capital into the oil and gas industry, right? So we have a debt product and an equity product. We have the ABS, and then we've got Energia, right? We've got institutional investors, and then we've got retail investors, right? So every single dollar of the nearly 4 billion oil and gas ABS dollars that came into the market last year, that's new money that wasn't available to the industry before the oil and gas ABS, right? These insurance companies need an investment grade rating to be able to buy these bonds, right? So I think all of those, those billions of dollars were not present in our industry, which is great for the industry. It's a great access to capital, and truly it gives even the smallest guy access to capital markets, right? And not only capital markets, investment grade capital markets, which is, kind of unheard of in our industry, since only the majors have a corporate investment grade rating, right? So